Hello there guys, welcome, karibuni sana to my channel. Guys, it's been a long weekend since Friday, but I'm back. Stronger than before, ready to do what we are meant to do. What we do, we are fucking ready to do what we are meant to do, what we love doing. Okay, so karibuni guys. Today is on Sunday evening. Over here, I guess it's around 10:30 p.m. here in East Africa, specifically Kenya, specifically Nairobi, more specifically Githurai. So by the I have my single room in Githurai. So this is my place. Because I'm a student at Kenyatta University, just as adjacent along the Thika Highway, I guess some will review. So here again, doing whatever we love, looking at the charts, trying to predict or anticipate where we are expecting to see prices to. It's been a great day on Sunday. Hopefully, you too had a great day wherever you are. And yeah, I'll briefly tell you how my day was. My day has been great. I'm from the Chelsea Man City game. I'm a Chelsea fan, like shit. So yeah, I'm from the game. Happy with a draw, a 4-4 draw. Yeah, those are whatever we love. So we are back here, and I guess if you can hear behind the background voice, you can hear some familiar voice. I don't know whether you can hear, but I hope you can hear. I was listening because I'm from the game. I've been listening. I was listening to my papa himself, ICT himself. He's my papa. He's the one who was taught me everything that I have now. He's the one. I'm applying his concepts. I use ICT concepts. So I'm listening to the welfare because I cannot, like, it's a repeat mode. I listen to it in the morning, and now listening to it, we were used to this during the weekends. I could listen to every Twitter space. I couldn't manage to be live, but YouTube, I'll get the video, the audio in YouTube, and I recommend, if you do not go back, if you have not yet listened to some of the Twitter spaces, I'd recommend that you may go and listen, because they're really insightful, they're really inspiring. It will give you the burning force that will make you keep pushing harder until the day that we'll see the other end. You see, when will be profitable, and I believe a day is coming. We don't know when, but we'll keep fighting until then, because for sure we know a day is coming. But we have to follow every steps, every anything that we need to do, risk management, anything for that result. We have to do it. But 100% I know with time, might take 5 years, might take 5 days, whatever. But we think long time, we don't think short term. But can take long, but a day is coming. So what I have come here to do is, on Friday I didn't do anything. I didn't do a trade review, what happened on Friday, and it's mandatory for me to do that, so I didn't do that. So that's why I'm here on Sunday, trying to do that before another week starts, because during the weekend there's no trading. And let's get cracking, let's get into it. This is the daily chart. I guess you can see this Friday huge candle up, and I'll go back to whatever I'm thinking for the next week. I'll get there, but before then, let's see what happened on Friday. Okay, so on Friday, on Thursday, we can see price had retraced into this fair value gap, this candle's high and this candle's low. Let me lower down my papa's voice, man. My we good. let the video play. I'll be back to it after this. So we can see here on Tuesday's high and on Wednesday's low, we had a fair value gap that was created. So on Thursday, the market traded into it. I guess you can remember these monthly inversion fair value gap. Sorry, I guess you can remember this monthly inversion fair value gap. I was saying that I should see it support price lower, whereby I was expecting to react of the constant encroachment around this zone, or the midpoint of this brown, I guess, rectangle you can see there. So the constant encroachment is around this horizontal line all through. I wanted to see it react off that place, but that didn't happen. So the week started off around here Monday, traded higher, and went cleared this high on Fridays, and now I'll get to the whatever I'm expecting this week. But on Friday specifically, we were in this fair value gap, and so if you were to be bullish, by the way, I wasn't really mentally stable for these shortly, guys. There's something here. Sorry. Yeah, good now. Wow, what is life, man? So on Friday, I wasn't that really mentally stable, so I was just looking at the charts, and then I felt a mental fatigue. I was just tired in my head. I wouldn't load anything, so I decided to leave the charts and go for a bike ride, because I'm a bike rider. I love cycling, so to relieve my stress, I left. So I didn't see price do this, but we'll get to the lower time frames and see what really happened in that fair value gap. We can see it there. I don't know whether my charts will be too dirty, but let's mock it, man. That candle's low and this candle's high. Then we change the color to red. Is red really cool? To black? Yeah, I add the intensity. Yeah, I guess let's make it blue. I like it. Yeah, blue. Guess we can see that daily fair value gap clearly. So dropping down to the 4 hour, what really happened? I guess from the previous previews, if you go back and watch, I wanted to see price Lily go lower, because generally we were bullish. If you can remember, just go to the previous videos and watch them and see how I had anticipated the market will play off. So here this week, around Tuesday, we were going higher, but it consolidated. So on Wednesday, I wanted it to retrace lower during there was a Powell speaking, but it didn't go lower. So it kept on consolidating here until Thursday, whereby these highs were cleared. You can see this is the manipulation phase, when to take this buy side liquidity, then distributed down. Okay, accumulation, manipulation, distribution. Yeah, then it distributed down to our discount level. I remember as we were utilizing this tool, which I was saying is my favorite tool. This high hadn't been formed yet, but we had this high. I guess this high, I mean these candles high there. You can see where the red line is, the 50 level. The red line is, you can see we had this fair value gap below here. I guess you can see it, but using this high, you can see price delivered down through these, through the red and the equilibrium point, lower into this fair value gap, then from which the low of fair value gap acted as support, whereby the candles closed along the low. I guess let's add another rectangular. Hopefully this won't be dirty, but I'll close it. Yeah, you can see that. Another color, maybe brown. Brown is common. Let's use pink. I guess you can see that pink. I don't know whether it's pink or that's red. You can see the low of that fair value gap. The candles closed there. The wicks did the damage lower, but the candles closed at the low of that fair value gap, and you can see the reaction of that fair value gap. So into the 1 hour, I want us to read price action. We can get off now the the Fibonacci tool. You can see how really price played so well on Friday, but I was mentally exhausted. You can see we had relatively equal highs over here. Yeah, that's buy side liquidity. Yeah, this buy side liquidity. We can see how they were run through over there at around 11 a.m. The market opened at around 9:30, traded lower, went higher, cleared the buy side liquidity. We had this candle um, uh, uh, sorry, I'm looking forward where these candles go clear, engage that liquidity that was above here. Then these other candles then rallied down. You can see the rally down on Thursday was huge, creating a market structure shift over there. Fair value gap that was not traded into showing huge, meaning this drop was so huge it went lower to this it was a 4-hour fair value gap. You can see how the candles were closing respecting the low. Yeah, rallied up, didn't tap into this fair value gap again, rallied lower, cleared this liquidity, also creating equal lows that will be engaged into some time, but sometime ahead. So you can see also from here market created a market structure shift and then rapidly rallying high to clear, I guess, our objectives in the 4-hour would have been these highs that were relatively equal. You can see this high and this high, they are relatively equal, so that would have been our target. Also, you can see it over here. We had clean liquidity over here that was to be cleared. You can see how the market cleared them, dropping with a 15 minutes or a 15-minute time frame. Let's see how price has played. Don't worry, I will clear these the daily fair value gap. Yeah, I guess you can remember this. Keep in mind that fair value gap. So we had a super consolidation here from Tuesday. You can see price was playing around this range until on Thursday around 10 a.m. we had it engaged there, and there's something I've been telling you about my stop loss. Okay, on Friday I noticed also something whereby, was it on Friday or on Thursday, a high had been created during the 9:30 open. Then if you do not use the 15 minutes time frame to confirm a clear market structure shift, I previously used the 5 minutes time frame to confirm a market structure shift, but most of the time I was stopped out because I had rushed to place a trade and my stop loss was being hit. I guess in my previous reviews you'll see my reactions on, I was asking why is always my stop loss being taken. Okay, so here I noticed something. I was watching the 15 minutes time frame, but there was no clear market structure shift that had been formed. Under the 5 minutes time frame, I guess you will go and confirm. We'll see a market structure shift, but on the 15 there isn't. So the market made a low here. It didn't break these with we don't see a candle closed below this low, then the market rallied higher, came and cleared these highs that had been formed here, then from which we can see a clear market structure shift, whereby this swing low, candle number 1, candle number 2, candle number 3, this swing low is broken down by this candle that closed below this low. Okay, so this is a clear market structure shift on the 15 minutes time frame, after it had cleared this equal high buy side liquidity. So liquidity has been engaged. The first thing, we have general buyers of we want to go lower. You can, if you go to the previous videos and watch these, I wanted to see price to trace to discount, then buy off to areas that I'd marked before. The previous videos have the draws on liquidity. So here a market MSS are not clearly formed, but we can see liquidity being taken here. That's our confluence number 1. Number 2, we can see a market structure shift here. Number 3, we can see a fair value gap between this candle's low and this candle's high. We can see a fair value gap there. Again, we have our general buyers, which is we want to see a drop down to discount levels, the specific a fair value gap. I guess you can remember it, this fair value gap, yeah, that. And we have spotted an accumulation before. We had this accumulation before, then we had this manipulation to clear by side liquidity, and now we are expecting the distribution phase. I guess you know the power of 3: accumulation, manipulation, and distribution. And all those confluences, placing them or using them at one time, they makes us to those are the confluences that you should be looking for when entering a trade, for you to be like, yeah, we are not sure, because the market does whatever it wants to do. But when you have all these confirmations, or these confluences, not confirmations, these confluences, it can make you be confident. Get rid of the fear, then be confident in strategy and put in the trade, and then see what the market will do. We can see what happened from there. The market tagged as, if I was to be in the trade around 12:30, the market tapped into that fair value gap, then sold off onto this fair value gap, the 4-hour fair value gap, from which I want us to read this price action over here very fast, on what how these candles react, or how the markets generally react. So we have this high, it dropped lower, to which point we cleared these let me see the previous day PM Asian lows. Let's see, we have Asia here. I want to label Asia from 8 p.m. with 8, yeah, we have these lows from that low to around 12 a.m. Yeah, that's Asia. I guess you can see the lows of Asia. Let me drag from this low. Yeah, use another color, red. Those are the Asian lows. To clear, let me, yeah, to make it clear, we have that Asian low. So the Asian low was cleared, then market rallied up for a manipulation phase to come for these equal, for these highs that are relatively equal, I guess, from the other side. So the market rallied higher to clear the buy side liquidity over here, then showed signs of confluences of going lower, creating a market structure shift and fair value gap there for entry. You can see also we have these high, low, higher high. We have this breaker, this bullish candle over here. It could be of another it's another confluences to confirm lower prices. And you can see I know for breakers, immediately price leaves the breaker, we usually have a propulsive move lower, a sharp rally lower, and you can see that is what happened. Let me make it, you can see the candles clearly. So immediately price tapped us into this fair value gap, moving lower, and it closed below this inversion fair value gap here. This candle closed below the inversion fair value gap, whereby if I was to be in a trade, if I couldn't have trusted this fair value gap here, could have waited this retracement down, then wait for a candle to close, then I'll enter my trade on this order block here, along this order block, around this place. We are in a sell here at the low of that order block, and my stop loss would have been above this breaker over there, would have been over that breaker. And you can see how price reacted off, targeting a 1 to 2 according to the plans, 1 to 2, yeah, which could have taken 1, 2, 3, 4, maybe 4 by 15. We have an hour to hit TP, I guess you can see. So that would have been my trade. You can see the market retraced, tapped that order block, this candle also tapped into it, then rallied lower into the 4-hour inversion fair value gap, or the fair value gap from which I had anticipated to confirm confluences to go higher. Then around Thursday, when the market closed, we had this consolidation inside there. For Friday trading, we can see the 8, let's mark the Friday Asian range. The 8 is to 12. There it is, the Asian range. Sorry guys, I'm using my phone. I have no laptop, no computer. I'm using my phone, but yeah, as long as we have the skill, it doesn't matter. So you can see here shit, what the fuck, yeah, you can see here these are the Asian range, and price was consolidating here around 3. We can see a high is formed, price comes lower, that doesn't clear this low, but clears the Asian range, shows signs of going higher, but reacts off this fair value gap here, these candles low and these candles high, then trades lower to clear these liquidity here. The London, I don't know whether we have London here, it clears the London lows at around these lows that were formed here. It clears them and forms equal lows with this previous low. So this is another sweet spot that we'll target sometime later. Then we can see a market structure shift over here. Price rallied higher, didn't show any sign to retrace, but let's see if you were to be in a trade, or next time if something like this happens, how could we maybe anticipate for prices, or how can we read these prices? So we can see the market rallied higher around here. It was these weeks, you can see back and forth weeks, meaning price took time around this zone and consolidated around this zone. But why? Because here I can see a high, low, these are low, higher, high, whereby the last bullish candles can react are a breaker, forms a breaker. So the last up close candles, we can have these two. I use the wicks, yeah, the green is a breaker, is a bullish breaker. You can see how price consolidated in or took time in this zone. It rallied higher, tapped into it, rallied higher, tapped again into it, then rallied really higher to our targets, which were these highs. You can see how price showed signs of retracing. You can see it reacted off the low of this fair value gap again, then rallied higher. Yeah, so that's how Friday played out, and I want now we can go to the 5 minutes time frame and see from Thursday how the charts were playing out. So back to where we are from. So this is what I was saying about the market structure shift. This was the first I entered my trade around this zone. I guess there's a video whereby I was taken out, a live stream. I was here. I was saying I don't want to see if I confirm a market structure shift that happened here. Yeah, it happened here. These lows were broken, these lows were broken, and this candle closed below the previous lows. So I guess I entered around this fair value gap, no, this order block here. That was my entry, but with my stop loss above that zone. But the market rallied higher and took me off. And also when these things happen, we tend to hold on to losses so much until everything is gone. But sorry, drink water. Immediately this high was broken, it was a sign that this market will go higher. But so these are things that I'll train myself. If I'm seeing an opposite of confirmations or confluences of prices going against me, I should be taking off these trades and then wait. If it will go my direction, if it goes my direction, it will give me other opportunities. If not that day, then that's not my day. I take off those small losses and I'm good. I don't feel bad because my mental stability is okay. So yeah, we can see price rallied higher, made these equal highs, came lower, acted off this fair value gap, then rallied higher, cleared these equal highs, then rallied down here, creating a market structure shift. This was the 15 minute, I guess you can remember the low. Yeah, this low, this swing low, of 15 minutes. That is what I'll be keen at, looking at the 15 minutes market structure shift. Here it's clear we had this market structure shift creating a fair value gap there. The market traded into it sharply. Then we can see a sharp rally lower. This was news. Before news, we had news at around 2, again creating these market structure fair value gap here. Price rallied into it. Is use of my favorite tool to see how it reacted. We can see prices closed at around the constant encroachment. The candles were closing there, then from there was so that's a confluence. Sometimes when you are maybe going lower and you see you are anticipating lower prices and you see fair value gaps, candles closing below the constant encroachment or at the constant encroachment, that's also a strong confirmation that these prices will rally lower. And also for strong bearish moves, we do not mostly want to see the whole fair value gap being balanced. You can see here there was a bit of it remaining open, so it's another confirmation that we are going lower. Prices then rallied lower, creating this value gap. Price tapped into it. We are seeing a low, high, lower low. The last down close candle over here, this is a bearish breaker. You can see it was tapped into, or that is paired with this fair value gap. It was tapped into and price rallied to our point of interest, that is this reddish, this fair value gap there. Yeah, on Friday we have this consolidation. Yeah, we have talked about it. Prices rallied lower, didn't clear these lows, retraced higher to this fair value gap, rallied, consolidated, rallied lower, cleared these lows. Then we can see a market structure shift around this zone. This candle closed above this swing high, then price rallied lower, reacted off this low, high, lower low, this breaker, this up close candles. By this, it reacted by this candle. Then after a breaker, whatever we are expecting to see is a sharp rally up. Maybe our first partials would have been these highs. You can see it rallied there, and we talked about the breaker that was formed there. You can see the last down close candle in this the 15. I guess I deleted them. Let me undo them. The last down close candles along these are these. I use even the weeks. I guess you can remember how price took it's saying price took time to get off this level. Back to the 5 minutes, sorry. You can see how price reacted off this zone. We had these down close candles here, tapped into, we have a volume imbalance around there, tapped into, rallied higher, then again into this second, tapping into another block and also the breaker, then sharply rallied higher, came lower, acted off this bullish order block, then rallied really higher. You can see these bullish order blocks, they are preventing prices from going lower. You can see here this another block was rallied, this candle came low, acted off here, this the order block rallied higher. We have also this candle here, closed above the order block, but the wicks did the damage into this fair value gap and then rallied higher. Also price came lower into this order block again. Here you can see how price is acting off the high, the open of this candle, that is an order block, then really rallied higher. So that's how Friday reacted, how price played off. Also came lower, closed around at the above, tapped into this fair value gap, rallied really sharply higher, and until wherever you are. So that's how the market has played off, or played off on Friday. And I guess from the previous videos, we were kind of right, but being right doesn't mean making money. So the main thing here in the market, it's making money. But so far so good. We have developed the skill set. We are good, and we really appreciate, because this far couldn't be easy, but we had some mentors. My mentor, for now, will fight hard to keep his footsteps. ICT himself, we will make his legacy last, and we will transfer his legacy to last forever. I really appreciate. He might not know that I appreciate, or this might not reach him, but I really appreciate him so much. And he left during the weekend, or he is out of Twitter, the social media, during this weekend, and to some extent we miss him. So it's early, but we miss him, because I'm used to hearing his voice daily, because I've put in the work of learning day in, day out. No day has ever passed since I started this journey. In Because I started my journey in February this year, but finding out about ICT was, I guess, 2 months later, after February, March, April. Yeah, on April. Since April, there's no day has ever passed without me hearing his voice. And for sure I'll miss him, but his legacy is here to stay, because we'll transfer it. It's very transferable, because it's working. We have not yet started to make money, but I believe a day is coming for us, because hard work for sure pays. So I guess you can tell my chart is so dirty. So I was let's clear this. I guess you can remember this one. Yeah, there's no importance. Now we want to see this week what we should be anticipating, or what I'm anticipating to see the market provide. Let me place this top. So starting from the weekly time frame, assume hopefully my charts you can see them, you can see my charts. So the market is usually driven by two things: liquidity and imbalances. So we had these weekly let's go back to the monthly. Yeah, because we have this monthly inversion fair value gap, these candles, sorry, these candles low, these candles high over here, this candles high and this candles low. We have this fair value gap that is in brown. That's the monthly fair value gap. That is also, let's, because the market, for us to sell, it must retrace to premium levels. Here around the premium levels, these the monthly inversion fair value gap is below the discount, but the market is driven by two things: liquidity and imbalances. Okay, so where are the liquidities? The liquidities are at these candles high, these candles high, these candles high also. So moving to the lower time frames, this is the point where we can spot these things accurately. So here, what I was seeing, what I saw, I guess you can see this 50 level. The market has already tapped into premium level 4. If we're going lower into this monthly fair value gap and also this weekly fair value gap here, price has already retraced to expensive prices for a sell-off. But I saw something that really made me or challenged me and made me think that we might be going higher. Why? Because I've seen a market structure shift whereby these swing high, these candles high, these candles high, and these candles high forms a swing high has been trade. The highs they have been engaged, and this candle, this previous week candle closed above there, okay, creating a market structure shift, okay, and also it created this fair value gap. As you can spot it inside that monthly inversion fair value gap, you have that that weekly fair value gap, and whatever I was seeing, if we compare this price action with the ES, because they're correlated, you can see we have relatively equal highs around this zone. Let me delete this. We have relatively equal highs here and also above this level. So because they move symmetrical, and this market for ES, let's use our Fibonacci to see whether it has retraced to discount to premium. You can see it has displays there, but not by that much, and also it's also playing around that monthly fair value gap, monthly inversion fair value gap. So but we can see equal highs, meaning we have lots of liquidity here there. So this week I'll be looking mostly at S&P. I'll be watching S&P because it tends to be more clear. The highs are being so clear. So going back to Nasdaq, because I was analyzing Nasdaq, these highs are equal to, I've also been not cleared in ES. So I'm bearish, I'm bullish for this week. So also came lower under the daily time frame. We have that market structure shift, the MSS, and this brown this purple box is a breaker, but we have these high low, we have a higher high there. We can see how candles reacted off this breaker, using the low as support, going higher. Also this coming week, I'm anticipating to see market tap into this daily breaker, which is paired with these two down close candles, that is the order block, and to see it being tapped into and then rally higher. Back in the for our chart, also we have a breaker that is a high low higher high, this bullish candle here. I've labeled that the 4-hour bullish candle, so I want to see price retrace here into this point, then or this is a fair value gap, and then rally higher. So that's my confidence for this week, and let's wait and see what the market will give us. So for now, I wanted because for now currently I've got no capital at all. I'm trying to find ways to find my capital so that I may now buy a challenge. I will start with challenges before a live account. Then from there, we can see what the market got for us. We will have to pursue our dreams, and I know we'll be there one time. So yeah, so for this week and for Friday, and I've given you my analysis for this coming week. Until we meet again, be safe. Asanteni sana. Welcome back to this channel. Please, to give me that motivation to do this thing daily, every day, please give me that like button, smash the like and also the notification bell. Also subscribe to my channel so that we may discuss. If you've seen something that maybe have not spotted, please let's communicate. I want to form a community from which we'll start trading, and we'll see what the market has for us. By the way, I've spotted this one thing. We have these BC CB sell side imbalance. This candles low and this candles high, a fair value gap, and also this candles high, this candles low, we have a fair value gap. When we have fair value gap corresponding or they're opposite each other, it makes this price action to be balanced. So these are balanced price range. So to some extent, we might not see price retrace, but let's wait and see so that we can learn from this, because it's been a challenge to me, but I guess this is a perfect opportunity to see how will price react of this balanced price range. So until next time guys, be safe. Asanteni sana, karibuni sana to my channel. Next time hit that notification bell, subscribe button, and also smash the like button. Until next time, be safe. Tuonane. Bye guys.